What if I told you there's a currency that quietly moves billions of dollars during global panic? And most traders don't even notice it until it's too late? The Swiss franc isn't loud, it's not flashy. But when things go wrong in the world, it becomes one of the most powerful currencies to watch. If you want to understand how smart money protects itself and how you can trade alongside it, make sure to like this video and hit subscribe. Trading the Swiss franc is very different from trading most Forex pairs. Just like the Japanese yen, it's considered a safe haven currency, but it behaves in its own unique way. The Swiss franc is heavily influenced by global uncertainty, central bank actions, and one very important factor that many traders ignore: direct intervention. In this video, we're going to break down exactly how the Swiss franc moves, what makes it unique, and how you can build a simple, effective strategy to trade it with confidence. Why the Swiss franc is special. The Swiss franc is known worldwide for one thing: stability. Switzerland has a strong economy, low debt, political neutrality, and a highly trusted banking system. Because of this, investors see it as a safe place to park their money during uncertain times. So whenever global markets get shaky, money tends to flow into the Swiss franc. This is the first key concept. Just like with the yen, fear strengthens the franc, confidence weakens it. But here's the difference. The Swiss National Bank, or SNB, actively tries to control how strong the franc gets. That adds a completely different layer to trading it: the safe haven effect. Let's break this down simply. When global markets are stable, investors look for higher returns. They move money into stocks, emerging markets, or higher yield currencies. In this situation, the Swiss franc usually weakens. But when there's fear, like a financial crisis, geopolitical tension, or sudden market crash, investors want safety. They move money into stable assets, and the Swiss franc becomes a top choice. This causes the franc to strengthen, sometimes very quickly. Pairs like USD/CHF or EUR/CHF will reflect this. If the franc is strengthening, these pairs usually move down. Understanding this simple relationship gives you a strong foundation for trading. The role of the Swiss National Bank, SNB. Now here's where things get interesting. Unlike many central banks, the Swiss National Bank doesn't just influence the market through interest rates. It has a history of directly intervening in the currency market. Why? Because a very strong Swiss franc can hurt Switzerland's economy. It makes exports more expensive and slows down growth. So when the franc gets too strong, the SNB may step in to weaken it. This means that sometimes, even if market conditions suggest the franc should keep rising, it suddenly reverses because of central bank action. For traders, this is both a risk and an opportunity. If you understand when intervention is likely, you can avoid getting caught on the wrong side of the market. Key Swiss franc pairs to trade. The most popular pair is USD/CHF. It's stable, liquid, and reacts strongly to both U.S. economic data and global sentiment. EUR/CHF is another important pair, especially because Europe and Switzerland are closely connected economically. This pair often moves more slowly, but can react sharply during major events. GBP/CHF is more volatile and combines both risk sentiment and currency strength, making it suitable for more experienced traders. Each pair has its own personality, but they all follow the core idea of safe haven flows. What moves the Swiss franc? There are several key drivers behind Swiss franc movements. First is global risk sentiment. This is the biggest factor. Fear strengthens the franc, stability weakens it. Second is central bank policy, especially from the SNB. Any statements or actions from the SNB can cause sudden moves. Third is interest rate differences. If other countries raise rates while Switzerland keeps rates low, money may flow out of the franc. Fourth is geopolitical events. Wars, economic uncertainty, or financial crisis can quickly increase demand for the franc. If you keep track of these factors, you'll start to see why the franc moves the way it does. Timing your trades. The Swiss franc is most active during the European trading session since Switzerland is in the European time zone. Major moves often happen when European markets open or when important news is released. If you're trading USD/CHF, you also need to watch US session data like inflation, interest rates, and job reports. For EUR/CHF, European Central Bank decisions and Eurozone news play a big role. The key is to align your trading time with when the market is most active and liquid. A simple trading strategy. Let's make this practical. Start by analyzing global sentiment. Are markets calm or stressed? If markets are stable and rising, the franc is likely to weaken. In this case, you can look for buying opportunities in pairs like USD/CHF. If markets are falling or uncertainty is rising, the franc is likely to strengthen. That means looking for selling opportunities in those same pairs. Next, check for any SNB announcements or warnings. If the franc has been strengthening rapidly, there's always a chance of intervention. Then use technical analysis to find good entry points. Look for support and resistance levels, trend direction, and confirmation signals. And always manage your risk. The franc can move unexpectedly, especially when central banks get involved. Common mistakes to avoid. One of the biggest mistakes traders make is ignoring the SNB. You might have the perfect setup based on charts and sentiment, but if the central bank steps in, the market can reverse instantly. Another mistake is treating the franc like a normal currency. It's not. It reacts strongly to global events, so you always need to look at the bigger picture. Overtrading is another issue. The best opportunities with the Swiss franc often come during major shifts in sentiment, not constant small moves. Patience is key. Building consistency. To get better at trading the Swiss franc, start observing patterns. Watch how it reacts during stock market drops, major news events, and central bank announcements. Take notes. Over time, you'll start to understand its behavior more clearly. You'll notice when moves are driven by fear, when they're driven by policy, and when they're likely to reverse. This understanding is what separates consistent traders from beginners. The Swiss franc is one of the most powerful and unique currencies in the Forex market. It's not driven only by numbers and charts, but by trust, stability, and global fear. If you learn how to read these signals, you can trade with a deeper understanding than most traders. Focus on global sentiment, respect the power of the SNB, and always manage your risk. Do that consistently, and the Swiss franc can become one of your strongest trading opportunities. If you found this video helpful, make sure to like this video and hit subscribe for more content like this. And I'll see you in the next one.